Hello, ladies and gentlemen. Welcome to Virtual Fintech Forum 2021. On behalf of Navsphere Media and FinTech Asia, I would like to welcome all of you to a wonderful series of sessions. I hope you've enjoyed the opening keynotes and also the headline keynote by Vitalik and Jehan. Starting off now will be the series of panel discussions followed by Startup Showcase. I want to take this opportunity to thank all of our partners, in particular our sponsors, Invest Hong Kong, who are the sponsors for this session, AWS Hong Kong, who are our platinum sponsors, S&P Global Intelligence, who are our gold sponsors, and Vacuum Labs and Krungsif Innovate, who are our panel sponsors. Of course, a lot of other partners who have been there throughout. And on behalf of my team and our organizers, I would like to thank them again. So start me up HK, fourth day, exciting times, future unlimited, and this is the future of FinTech, and the GBA leads the way. I'll now hand you over to Maggie Law from Islamic Finance, who will be moderating this panel and having a discussion with our eminent speakers. Maggie, over to you.
Hi everyone. Welcome to today's workshop. Our topic today is Silicon Valley of the East, how Techfins in the Greater Bay Area are reshaping FinTech business models. This is Maggie Law, Chief Representative of Asia Pacific, Islamic Finance Global. It is my great honor to be the moderator of the discussion today. First of all, let me introduce our speakers today. King Leung, Head of FinTech, Invest Hong Kong. Ernest Leung, Group COO, WealthTech. Yali Zhu, Head of Zhangle Global, Huatai International. So first of all, can I invite three of our speakers to introduce themselves a little bit more? I will start Yali first.
Hi, everyone. We're glad to be invited for this like a virtual forum, and thank you for Maggie and then all the organizers to invite Huatai International for this forum. And then I'm Yali Zhu. I work in Huatai International, located in Hong Kong. So I'm also leading one of the wealth management apps, Zhangle Global. Hopefully that everyone today on the audience part will be one of our users later. Thanks.
Thanks, Yali. Then Ernest.
Hi, good morning to you all. This is Ernest Leung, Group COO for WealthTech, based in Hong Kong. So WealthTech is a Hong Kong homegrown fintech firm. We have businesses obviously in Hong Kong, in mainland China, as well as in Indonesia. We're in the business of consumer finance, as well as of late, virtual banking. So very happy to be in this forum this morning, and hopefully looking forward to sharing some good insights with our fellow panelists.
Thanks, Ernest. Then King, please.
Hi, thank you, Maggie. Hello, everyone. King Leung, the Head of FinTech Invest Hong Kong. So for those of you who are not familiar with what our FinTech team is doing, in addition to the primary remits for driving FDI, foreign direct investment, for attracting international FinTechs to Hong Kong, actually, we are working very, very closely with the local stakeholders, because at the end of the day, we are really trying to push forward more FinTech adoption so that the whole ecosystem is more vibrant. So this includes having a lot of close contacts, relationships with the local FIs to understand the problem statements, the needs of theirs, talking to the FinTech investors, so that as we talk to these local stakeholders, we're able to basically meet their needs when we talk to a lot of international, very highly capable FinTechs to bring them over to enrich our local Hong Kong ecosystem.
Thanks, King. As wealth management connecting the Greater Bay Area is about to launch soon, we can foresee that the connecting financial industry will become closer. So today we will discuss those details with our three speakers. And first of all, I would like to ask Yali, because in recent years, as technology has been developing very fast, trading habits have been greatly changed, and Zhangle Global is one of the key players in the market. So can you share the experience when you firstly do it?
Sure. Thanks, Maggie, for the first question. And then as one of the wealth management applications that are available in Hong Kong for investing in global markets, and we do see a lot of things change because of the technology advantage in the Great Bay Area in general. So maybe we can talk about this user experience from four different aspects. First, the trading in terms of trading our investment is definitely getting faster and faster. Like all the real-time market data is almost instantly at our fingertips. So because of the mobile technology advancement, and then also all the technology because of internet and technology, so all the people will be able to get all this like real-time market data information, and then also the corporate newses at the very fast speed. So this is the first thing, everything becomes so fast. And then second one is definitely your investment opportunities and choices is way easier. So because of the, we used to, if you imagine like in 1980s, everybody need to, stay in front of a desktop in order to do the investment. But after like 10 years later in 1990s, we'll see like mobile apps because of the mobile technology has bring everything up to the application that we can use our phone to do the investment. And nowadays, it's absolutely that you can trade anytime, anywhere. So investment is becoming very easier because of the technology. And then the third one is we can see like people are becoming more and more professional just because, again, thanks to technology, because all the informations and the technologies has bring up the everything that we needed for our investment decision is pretty much everywhere that we can access. And so like people are becoming more and more professional, meaning that, like there's a lot of tools that can help us to do it. So we will know what is who is buying and who is selling, and what is the major stakeholder changes, and what is the corporate news. And then almost instantly is available to all the retail investors. So like everybody is using all the technical indicators and MACDs and ISS, all these things is all at your fingertips. Then people can do a professional investment based on the information really available for them. And the last thing is participation. So we can see that before that, like people in China, they only know how the A market, the A group market shares, and they only know about Chinese market. But right now, the door has been opened to the global market, and everybody can see participation rate is really taking up. So you're not only limited by physical where you're located, and you can easily get a remote account opening with an overseas account, and you'll be able to participate in the global market. You can invest in Singapore market, US market, Japanese market, as long as you want it. So I think like from the trading habits perspective, it's becoming faster, becoming easier. And people become more professional. And the last, that you have a lot of participations in all different kind of markets. So basically in general, because we cover mostly on retail clients, and we do see the retail market is getting more and more institutional wise kind of service. So all the things available, including the infrastructure, and then also the market and product is becoming more and more available to individual or retail clients. So that's one of the things that we see from our wealth management perspective. Yeah.
Thank you, Yali. I can still remember when I first come to Hong Kong, I used the phone to buy stocks, and I don't know who I'm talking to.
Them, right?
Yes, I have to use
the phone. Mobile apps.
So I think you have really changed the industry. And my next question will be to Ernest, because when I first come to Hong Kong, I used to queue a long time in the banks. And now virtual banks have been developing in Hong Kong for like 1 year. So what changes do you see that have been reshaping the business model in your experience?
Right. No, thank you, Maggie. I think change began when the licenses were granted by the HMA to the 8 virtual banks, and obviously we are one of them. The queuing is an interesting analogy, but frankly, that's not one that we use a lot in WealthTech Bank, because our target customers are already mobile and web natives, and in fact, a lot of their banking or other lifestyle transaction habits have never been about queuing. So it's an interesting point, but it is something that we already take for granted, that customers expect more in terms of speed, in terms of diversity, in terms of just a range of products that we can offer. I would say since the launch of WealthTech Bank, we have a very good positive affirmation of what the changes that we had anticipated. So beyond the convenience and sort of anytime, anywhere, customers are really engaging with us at the time that they choose, and we are actually giving back the control of banking as opposed to a bank-determined services. It's completely at the fingertips. In fact, nearly half of our new customers establish relationship with us outside of normal banking hours. So that's an interesting observation there. We are able to propose more tailored services based on big data analytics in order to offer the right services at the right time. Now, if you look at, we always say, if you look at the simple product like a term deposits, right? Even as fundamental as a product, we were able to create something new for the customer called GoSafe. It's a community-driven deposit product where the interest rate increases with the number of participants. This is the first in the market, and based on the take-up rate, we know we have hit a good spot with our target customers. Because as you know, in a low interest rate environment, it's very difficult to access decent rate if you are an individual depositor, but with collectiveness and with the community that we have built, customers are able to access those. We see beyond customers coming to us finding, hey, virtual bank is new, let's just give it a try. We actually see a very high degree of engagement, and we firmly believe this will stay. This is a habit change. This is a difference in terms of how customers engage with their banks, and this is here to stay. We have 80% of customers that bank with us have more than 2 products with us. So this is not a single one-off, just a pure curiosity type engagement. We have, clocked over 1 million card transactions since we launched. That's a very encouraging figure. In terms of ongoing, customers will come to us because they see that the products that we design have them in mind. So the ability of technology is only as good as the bank's ability to understand consumers. So I think we're in a good place to marry deep understanding of consumer insights, their pain points, what they're looking for, and deliver that in a technology-driven manner. Now, interestingly, we launched the bank during COVID, and frankly, there's no better time to launch it. It's an absolute right timing, firstly, for a proof of concept, right? It is when people cannot access the physical branches, they cannot access a physical engagement with their maybe traditional institute, that we are successful in the early months in terms of onboarding customers, and this is the right timing to show that people are receptive to banking differently, and we look forward to a really bright future.
Thank you, Ernest. I'm a user of Virtual Bank too, so I find it really fast and very convenient. And both Yali and Ernest have changed my life. So I have a question to King. From your observation, what changes do you see that have been reshaping the fintech business model?
Well, there's a lot, but in the interest of time, I would just highlight 2 observations that I've been seeing in the past year to 2. Now, first of all, as Ernest and Yali just mentioned, I would say the first generation of fintech innovation happened mostly in the B2C space by making the so-called traditional user experience better, faster, and cheaper, and so on. So this has been happening. So the pioneers have been gaining some great traction, high valuation, and so on. Now, and obviously, that movement has put the incumbents on notice. So they really have to catch up. Now, but then for them to catch up, it's not as easy. It's easier said than done. So that basically prompted the next wave of changes, and that is more B2B driven. because obviously I think the banks and the insurance companies, asset managers and so on, it's not that they don't want to change. It's just that the underlying infrastructure is so antiquated. It's just hard to change. So that's why, for example, we came across some like banking as a service kind of fintech, and they're able to cut down the launch of a new banking product from something like 30,000 hours down to, I think, 200 hours. There's some sort of metric like that. So I think the exact number is not important, but it's all the magnitude of a reduction on the IT resources and turnaround time is something that's just mind-boggling. So from my observation, the FIs are seriously looking into transforming themselves by adopting different fintechs to catch up, and in a way to sort of catch up with the newer and better user experience from the newer players like the WealthTech and so on. Now, the other thing that we also see, the second major trend I want to highlight, is that as we have more and more fintechs adoption, both in B2C and B2B, obviously there are just a lot more transactions, a lot more data going back and forth. It's just making a lot of the folks in the incumbent in the compliance departments, putting them in a very difficult position, right? It's how do you sort of monitor to make sure that things are going on smoothly. So that's why this is, in a way, giving the rise to the RegTech space. So that is gaining a lot more traction, particularly now with HMA coming out with the 2-year roadmap to try to foster better adoption of RegTech. We can see that there's going to gain more traction to, in a way, get the compliance, put things under control in a much more cost-effective way.
Thank you, King. And I want to go back to my experience. So before I used the phone to trade stocks, and now I can use, and maybe later I use websites, and then I use apps. So Yali, based on your experience, what changes do you see in your industry?
Oh, that's a really good question. So I think from industry perspective, like we are in the brokerage, traditionally we call ourselves like broker, and later on we call ourselves like a wealth management, firm. So like it's the transition is naturally come from the user requirement or user need. So basically, if we're talking about from the industry perspective, it's actually changing us quite a lot. We can see like technology is really disrupting the traditional wealth management, or in general, like brokerage business, mainly coming from 3 aspects again. So the first thing that if we think from the front end to the back end. So first of all, normally client will be accessing this market through our sales or, like a marketing material. So the fundamental change is actually coming from the way that how the traditional sales is delivering this message of marketing and the sales experience. So basically, traditionally it's all offline, and then you have a RM, like a relation manager, is going to talk to you and then tell you what is happening, what is the market trend, and what's our recommendation and stuff like that. And this is not very efficient because like every single day you can only talk to at maximum 10 people mostly. And then because of the technology of internet, the help is the internet. And then right now, all the things can be done online. It's more efficient and the coverage is higher. So the traditional RM is becoming more and more using this online channel to distribute this marketing environment, marketing document and sales information to our clients. It's more efficient and the coverage is higher. So that's from the front end of the whole sales experience. And if we talk about the back end, and also like before that, we do have a lot of operation people and the technology doing the manual work. So we need to do a lot of paperwork and everything pretty much on paper. And then you have to sign it and you have to check it by eyeball checking to see whether it is the real signature of certain people. And of course, the traditional account opening has to do through 3 days, and you have to come to the office and sign all the papers and provide all the documents. But right now, it's everything simply online. So from the perspective of a back office or middle office efforts, and then right now everything is pretty much online, so people can open an account online within 3 minutes with our apps. So it's cut down the cost from the middle and back office. And then right now we're even looking at the RPA to replace some of the traditional tedious works of a human being. So from front office and back office, technology has shaping us quite a lot. That's the disruptive part. But if you ask me what is the fundamental change in our wealth management or brokerage business in general, I think it's just the most disruptive part is actually coming from the pricing model. So basically, start from US, I think we see the first zero commission, marketing things comes out with Robinhood, and later on we see the traditional investment bank like JP Morgan, even Charles Schwab, the traditional wealth manager giant of every single industry is actually offering the zero commission to clients, because we know with the advance of technology, by simply charging people on the channel distribution is not going to work. So you have to give or offer clients a better service in order to charge more fees. So the competitiveness in our industry is getting higher and higher. So you only charging people by, I provide, participate in certain markets is not good enough. You have to either provide a better service in terms of execution. Either you become faster or easier, or you have more information or the more technical tools for them to help them to make investment decisions, or you provide the advisory services to the client in order to charge more. So I think from our perspective, like the zero commission that we offer to client, we just want to see that, from the brokerage industry, the before years for our, we can just sit in and then provide the service and then charge a high fee. Those days are long gone because of the technology. And then as Kim has just mentioned, that it's become cheaper for the client. So it's a beneficiary to the end client. And then, but it's a shaking part for our industry. So people have to make sure that we know how to make money out of your service provided, add value service provided to the clients. So yeah, that's pretty much like things that we have seen from our industry. Yeah.
Thank you, Yali. Thanks to the technology, I can trade securities with zero commission. And I think Ernest have the similar experience based on the experience on virtual banks. But as we know that WeLab is not only has virtual banks, they are also a very successful company in the Greater Bay Area. So Ernest, I want to ask you, what opportunities do you see in the Greater Bay Area, and what's your strategies and in the development of the Greater Bay Area?
Well, thank you, Maggie, for that question. Yeah, I think the company and our founder, we had the foresight of being in the now today Greater Bay Area before the Greater Bay Area term even came to being. I think it used to be called the Pearl River Delta, but we did expand very quickly only a year after the company was founded into Shenzhen. And I think that past 7-8 years of experience have served us well. We maybe just a quick introduction. We do a lending business in China nationwide. We also have a business-to-business line of business in China as well. I think King mentioned earlier to not just the B2C space, but also the B2B space. Opportunities. I think I think everybody understands that opportunities. It gives us a platform into sort of 10 times the population than just Hong Kong. The population, it's young, technically savvy, very natural adopters of the technology and services and products, financial services products that we offer. And another point not to be missed is it is a large pool of talents that a company like WeLab could tap on. So the relationship or the internal organization, it's very much both ways. And it has to be both ways in order for the company to be successful. Hong Kong is a natural place for both Chinese technology company to come to Hong Kong, as well as international financial companies to come to Hong Kong. That bridge, we don't need to belabor on that particular point. But what's interesting for us is that all the technologies that we're able to develop, the R&D, the proximity to the big technology companies in China, actually gives us a very good insight into what's to come, and we're able to leverage that technology and actually deploy it elsewhere. In fact, our Indonesian business, our Hong Kong business leverages some technology that exists in Shenzhen, right? So that particular strategy will continue. what we learned internationally, what we learned from China, both from a business and a technology perspective, we can cross and use. Especially true is data. I think earlier we mentioned the use of data, we mentioned AI, machine learning, but one important part in relation to that is the security, right? Is the protection of that data. Accumulation of data is one thing. Having the consumer insight and know-how to use that data is important. And as we all know, and I'm sure the audience will be aware of this as well, you know, it's only good when you have masses of data, and the Greater Bay Area and to a much larger extent China gives us that opportunity. So we can build the models, we can learn about consumer behaviors with the much larger consumer and database that we have. Now, because of that, we have a responsibility to protect those data as well. In fact, WeLab has a R&D center in Shenzhen, which is separate from our technology department, that looks a lot into edge computing, federated learning, really using data in a responsible and in a consumer protected manner. So that's a point that we have to keep in mind. And frankly, the strategy for us, we are fortunate to be in a space where the governments and all stakeholders are strongly promoting that bilateral, multilateral ties within the Greater Bay Area. So we have at you know all the stakeholders' disposal a talent pool from both technology and banking business perspective. We have a market that is ready in terms of their technology savviness and daily usage habits. And from a timing perspective, you know, the rules and regulations are set up to help the industry forward. So yeah, this is a good time and good place to be.
Thank you, Ernest. And I would like to ask King about because you're head of FinTech in Invest Hong Kong, and I want to ask you, what are the advantages for Hong Kong to develop FinTech, and what do you see the opportunities in the Greater Bay Area? Thanks.
Oh yeah, wow, this is a loaded question. No, so first of all, let's talk about Hong Kong first. Okay, now the natural advantages of Hong Kong is something that for those of us who have been living in Hong Kong for a long time take for granted. Now the fact is that the status of being an international financial center cannot be taken lightly. I mean, it takes like generations of people to build up Hong Kong as it is today. But now that we have attained that status, I think the benefit is that we have just a lot of financial institutions in Hong Kong, right? Like hundreds of banks, you know, the insurance companies, asset managers, securities firms, and so on. Now, so we are talking about the opportunities for the B2B fintech companies. To be honest, I cannot think of, you know, a lot of better places to be, right? When we try to sell fintech solutions. I mean, it's a small place. You have so many potential clients. I mean, this is like no-brainer, to be honest. Now, so this is the advantage for Hong Kong. Now, the other thing is that when we look at the extension of Hong Kong into GBA and mainland China. Now, in fact, I've been talking to a lot of executives and entrepreneurs around the world. Recently, I talked to people from Brazil, like Switzerland, Israel, like Poland, and I mean, of all places, right? Besides the usual suspect of the US, UK, and so on. Now, interestingly, now, despite all the things that happened in Hong Kong in the past 2 years, now, naturally, when people think about expanding to Asia, they think about just immediately, right? Think about North Asia, South Asia. Now, we talk about North Asia, of course, I think the big opportunities is China. Now, can companies go direct? Absolutely. But are they going to go direct without making a stop in Hong Kong? Even to this date, this is a big question in which, to the air of a sort of caution, I think a lot of the international fintechs would still prefer to use Hong Kong as the initial landing spot. Now, and then as we have the deeper conversation about, you know, the GB opportunity. Now, oftentimes, you know, people would ask, well, is it some sort of very clear policy, like a through train kind of opportunity, no need to get a license twice? You know, actually, put that aside, right? When we think about, I think, success of WeLab, for example. You know, I think the WeLab has presence in Hong Kong, in Shenzhen, because I had the privilege to visit the team, a lot of really smart people. I was just blown away, right? No, but by just physically there, and you hire the local talents who also have the local connections, either in the private sector and in the public sector. So that is something that's very difficult to replace by having someone sort of managing, the China strategy remotely. It's just very difficult. So you have to have people on the ground to tap into the local connections to make things happen. Because after all, the strategy is executed by human beings. Now, and then from a policy standpoint, things are slowly becoming more clear, right? So I think the Wealth Management Connect is something that a lot of people are looking at for a long time, and thank God, right? So now it's officially launching. So with that, I think the other connects, like the Insurance Connect, will surely come in line after the sort of the pilots becomes more successful. So this is something that obviously I think the leadership in both mainland China and Hong Kong are very cautious about this sort of sandbox. This, after all, GBA is like a sandbox for the financial market reform or for China. So things have to be taken more seriously and cautiously. But as we sort of gradually open up the opportunities, I think for those companies that made that initial investments, those are the ones that can really leverage on the first move advantage to do great business in GBA and by extension to the rest of China.
Thanks, King. So as you mentioned that Hong Kong is a very important place, and Yali is from I think I know your headquarters is in China, in mainland China, so that you have deeper understanding about what role can Hong Kong play in the development of FinTech.
Oh, so okay. Yeah, sure.
Explain.
Yeah, I think I wanted to echo what Ernest and Kin has just mentioned about the importance of Hong Kong being one of the connection or bridge between China and the rest of the world. So I think Kin has mentioned a lot about we want to borrow the term of northbound, because like people, if you wanted to target your client as in China, so Hong Kong is probably the most easiest and safest landing place for them to do this innovation ideas to test the water. And I totally agree with that. And the other side, I wanted to talk about the southbound. So which meaning that people actually have a requirement going to invest in the global markets. So when we talk about FinTech, normally, especially from the wealth management perspective, we normally care about two things, the fundamental two elements. The first one, where is your target clients? And then the second one, what is the target problem you're trying to tackle? So we can now just use technology for the sake of technology. We have to use technology for solving some problem for certain people. Either is being to address some of their real helping them to find their real desire or their real requirement, or addressing some of their pinpoints, doing certain things, or even increase your clientele from a business perspective. So all those things we have to find our target client first. Okay, if you're thinking about wealth management, we have to find a big enough market in order to test the water. So where is the big enough market? China is definitely one of the choice that you cannot avoid. So everybody, not only us, people traditionally from China, notice that China is a bigger market, but also the international international markets also realize that if you wanted to do something in the wealth management part, you cannot ignore China. So we have some data to support that. A fundamental idea is that Credit Suisse normally publish their wealth management status. They will do an investigation on what is the wealth change from the global perspective. And then based on their 2019's data, we can see that China being the number 2 GDP country. And then if we're talking about the middle class in China, so middle class, let's have a definition about like the average investable asset between 10,000 Hong Kong, like a US dollar, to $1 million US. So 40% of those people is actually coming from China. So you are facing a bigger market if you want to do the wealth management in the mass market. Okay, so China has to be one of your target clients. So that's the biggest area. And then which market is going to be the best fit for that is definitely going to be Hong Kong. So if you're talking about people's connection or closeness, geographically, or culturally, Hong Kong is going to be the best choice for most of the fintech innovations and technologies that they wanted to test the water. And then from the other aspect, we can see that Hong Kong is the open market, it's a developed market, as Kim also mentioned. There's a lot of traditional financial industry, like it's one of the biggest industry, financial industry in Asia. So it has not only the institutional, different part of institutional financial industry has already built up their roots in Hong Kong. It's also, there's a lot of product and services already very mature in Hong Kong. So this is going to give us a real use case for whatever the problems that we're trying to tackle. So for example, before that in Hong Kong, then all the trading apps is very slow and there's no real-time market data and people cannot see the in-depth market data and stuff like that, and they can now trade instantly. All these things will be tackled because you have more use case comes in, and then there is an industry that is going to support that need. So I think Hong Kong, because of the China connection, and then also the fundamental business that already maturing in Hong Kong as a financial center in Asia. So I think Hong Kong is the whole tech innovation. So that's from our a wealth management industry's perspective. Like when Huatai has chosen to get into the international market, Hong Kong is our first step. And Hong Kong is going to be our international center for sure, because we think that Hong Kong has such an important role in this whole innovation thing.
Thanks, Yali. So I want to ask Ernest about your experience, because you have a lot of business in the Greater Bay Area and Hong Kong. So based on your experience, how does Hong Kong define itself in the development of fintech in the Greater Bay Area? Thank you.
Yeah, thank you, Maggie. I think I alluded to this earlier, and King also mentioned his perspective and a bit of WeLab's history. So thank you, King, as well. The connection between the two, at the end of the day, yes, we do deliver technology solutions, but it is human beings that are bringing all of these together. To be successful in the GBA, I think there are a few learnings, I guess, from our earlier entries. I think we have to be adaptive, right? It's adaptive not only in the sense that technology is changing, there's disruption in technologies, but adaptive also in terms of the consumer appetite and being adaptive in terms of the regulatory changes. Now, the regulatory changes directionally, I would say it's a positive one, right? It's the clarity of the regulations, the support of the regulations, the increasing consumer protection, especially around sort of data protection, making sure that all the practitioners are entering and engaging the market in a fair, open, transparent manner. Those all plays to WeLab's strength, right? The ability to really adjust and adapt as we go, be it business model, be it technology. I think that's something to keep in mind, and that I think it's a strong point that we have to any players in the space needs to have. The second one is work with strong local partners, right? We know what we know. And we also don't know what we don't know. And so in the case of working and entering into a market, we rely heavily on local partners, be it their insights, be it their network, access to capital, and frankly, the accelerating the company's own learning on local consumer behavior. For example, WeLab Group partners with the Postal Savings Bank of China. We are the provider of their online consumer finance business, and their massive network, customers, officers of the bank in different regions of China. Those are tremendously useful insights for us to continue to evolve and develop our products. So having a not just a foot in Shenzhen in the Greater Bay Area, but through partnerships by extension to the rest of the country, gives us both a tremendous market for us to tap, and also tremendous insights, learning for us to continue to evolve and develop and frankly better ourselves to stay competitive.
Thank you, Ernest. I would like to ask King, because both Yali and Ernest have elaborated a lot on how unique Hong Kong is, and as based on your experience, which key sectors should Hong Kong prioritize in the development of fintech in the GBA?
Sure. Now, first of all, I had this question posed to me when I was in Shenzhen about 2 years ago, and there were a bunch of fintech entrepreneurs in Shenzhen, very experienced, like ex-bankers and so on. So asked me the same question. Now, and actually, one of the gentlemen actually even gave me the answer. And he said, "Hey, Hong Kong being a IFC, I mean, it makes perfect sense, right, to do fintech." Right. But again, Shenzhen, you got this like great pool of talents, and the finance pool of talents in Hong Kong. I mean, fintech is just a no-brainer as well. Now, but then if you drill a bit deeper, now at the end of the day, the positioning of Hong Kong, in the grand scheme of the overall strategy of mainland China, right, particularly in the 14th five-year plan. So we really sort of look at the fine details. Again, without going into a lot of details, there are two primary observations. Now, first is about the cross-boundary or the cross-border role that Hong Kong can play. Now, it can manifest itself in different ways. It can be trade finance, or it can be cross-border payment, remittances, or even we talk about, let's say, digital currency, right, which is a very sexy and hot topic lately. So, of course, I think that mainland China has been just light years ahead of a lot of other jurisdictions. Hong Kong is also playing a role in our pilot with Bank of Thailand. So, in a way, Hong Kong can play the role of that international link when digital currency becomes like an international phenomenon. So I think the first point I want to make is the sort of cross-border related kind of business activities. It can be wealth management, it can be payments, and so on. Now, the second bit is also highlighted in the 14th five-year plan, and that is on RegTech as well, so regulatory technology. Because obviously we are living in sort of unusual times. What can we say, right? 2 years ago, if we were to play a script or predict a script, what's going to play out in the next 2 years? There's no possible way we can imagine things unfolding the way it is. So I think with all these changes, against putting ourselves in the shoes of the leaders, it's not hard to imagine that it's very important to ensure stability, so things will not go haywire, right? So the big whipsawing effects, and then I think in Chinese term, 各走菜, right? So some people like to say that, right? All these like wild swing in the market. So again, of course, I think from a government perspective, we want to protect investors. We try to avoid people getting hurt. So naturally, I mean, this is good intention, right? But then in terms of execution, how do you do that? I think policy is one thing, but then in terms of execution, you need to have tools to automate some of the monitoring and risk control and whatnot. So this is where I think the RegTech, regulatory technology, the SupTech will come into play. And obviously, there's some really smart people, including the major banks. So to my understanding, I see ICBC, for example, they've been developing their own like RegTech capabilities, which is supposed to be world-class. And at the same time, in Hong Kong, we are reaching out to all the great RegTech hubs around the world to try to find the most capable RegTech talents and companies to try to invite them over to Hong Kong, so that to arm with us the sort of world-class capabilities, so that as we are innovating, at the same time we got the sort of the safety nets to make sure that things are happening orderly. So in a way, I think Hong Kong does have a role to play, and then those two things I just mentioned are just some of the ones that I want to highlight.
Thanks, Kin. I think all of the three speakers have made a very important message that if you want to come to do business about fintech, you must come to Hong Kong. Thank you again for all the speakers' wonderful views. I would like to take this opportunity to thank the organizer for this wonderful event. And also I would like to thank Invest Hong Kong to organize the Start Me Up Hong Kong Festival. Thank you and have a nice day.
Okay. Thank you. Thanks a lot.
Bye.